Pat, the shine seems to be missing from Titan's fourth quarter show. The bottom line was dragged by a one-off, margins too were off the mark, but the company has made good when it comes to the FY19 jewelry guidance. So let's take it across to Vivek, find out what the brokerages are now saying about the earnings. Vivek?
Well, good morning. So most of the brokerages, have trained their lens as far as Titan internals are concerned. Remember, optically, it appears to be a weak set with a miss both on margins as well as the bottom line. But what most of the brokerages have done is that they've attributed the miss in margins to multiple one-offs, like you rightly mentioned. And most of the brokerages are quite upbeat when it comes to Titan. They believe that the main thesis playing out as far as Titan is concerned is the market share gains that the company is steadily witnessing as far as the jewelry segment is concerned. Now, if you're talking about what Macquarie has to say, they believe that the multiple one-offs, including the provision for IL&FS that the company has taken quite prudently, is something that has impacted the margin. What they're saying is that, in fact, they've raised the target price to 12.94, and they believe that Titan remains their top pick as far as the consumer discretionary space is concerned. Morgan Stanley, on the other hand, what they're saying is that they believe that the strong margin expansion that the company is seeing in the jewelry business is here to stay. And the one thing that they highlight is that the watches segment is something that has still not started contributing quite reasonably or quite significantly as far as the EBIT is concerned. What they're saying is that the management commentary that was quite strong on the conference call is something that should allay most of the investor concerns. Lastly, what CLSA is saying is that, again, you're seeing another EPS upgrade. What they're saying is that the resulted numbers, the reported numbers were marred by multiple one-offs, and this is something they believe should, investors should take as the one-off, and they believe Titan remains a strong buy. Lastly, Jefferies is saying that the healthy top-line growth is something that investors should concentrate on. Even the watches segment is something they believe has done quite well as far as, the growth is concerned. In fact, the watches segment has seen tremendous growth, although it is off a lower base. In fact, we have the management conference call bites, and, you could listen to it given the strong commentary that the management has alluded to.
The margin, as you mentioned, is certainly not showing any volatile patterns. It is as expected and as it was supposed to happen. For the simple reason that, quarter after quarter, we have been saying that don't look at the specific quarter, look at the full year. So the overall perspective that I wanted to share with you is that the fourth quarter is always the weakest quarter in terms of sales for the watches business. This year has actually been the best year in terms of the highest ever EBIT margin, the highest ever profit, of course, a whole lot of milestones in terms of what the brands have achieved, plus a significant foray into the wearable segment. So in the fourth quarter, the mix got also affected by a large buyout of, from the outside in terms of wearables and licensed brands, which also impact our margin. So basically product mix, channel mix, and the ex gratia. So don't look at this quarter, look at the full year, and it is one of the best years in terms of sales growth being 14-15% for the year, but the profit growth is more than 20%.